Happy Halloween, 10/31/2012. How about that? Here, want to take a look at what happened today? We'll tell you exactly. As we have said time and time again on the analysis, that we had to test this 200-day simple moving average right here on Apple, 587.70. We tested the 200 simple day moving average. We go back to where these gaps started and where these big runs in Apple had occurred. What a great market that was at that time. A lot of fun to the upside there. Now that we're here, we've tested it. We are going to be looking at where we would hold now that we've tested it and we bounce. That's a confirmation. And the call contracts, like the 590 call, this one is going to pay big money tomorrow. It did do well today. It went to 13.80 on the high, 629 to 13.80, yeah. But they closed at $18.90. They're still marked down $10. These 590 calls in a very short term for intraday trade only for weekly expiration are very tradable and profitable. Yes, they are. Oh, yes, they are. And let me tell you another thing. That 585 call that's right here, right where this 200-day simple moving average was, that bounced like a rocket. It went from 587.70 to 601.96 off of those lows. The original highs on the open were gap down ratios, sold down and tested that 200 simple day moving average on Apple, where the buyers emerged and stepped in. Then, now that we have the confirmation, you're going to have the least amount of risk. Now that all the risk for the people, all the bulls that held it all the way down from 705 to 587, that risk is out, and we started buying today at the 200 simple day moving average. Why? Well, because that was a major test. Now that it's tested, all the risk, or a lot of the compounded risk, is out of the way. So therefore, what we're going to do is continue to buy the 585 call that expires on Friday and making lots of money. The high was 17.90, 21.95. They closed. They're still marked down money. And these are wholesale now. And that's based on this Apple testing that 200-day moving average. And, we shorted all the way down at various times, all the way down, as you know. All of you know. Because we have all the live trades to prove it there with Apple, with the live analysis and everything on where it's going to go. I can tell you we're really excited about the 590 call, because they marked the thing down $10 through the close. Yeah, they hit a low, but there was a big bounce. You do 20 of these contracts, take $5, that's $10,000 trades here, people. We love these. We live for this. So what we do live for also is what risk management would bring by testing that 200-day. We're going to look at different support levels now that it's done. It doesn't have to come down and test it again. What we like to see, though, is where this narrow range, see the sell down, the bottom up. It's very, very narrow range. Some people can give different names on these. Some people say, oh, well, that's like a doji reversal to go higher. Or some people can say it's something else. All we care about is Apple has finally got to an oversold condition at the 200-day moving average. And it hasn't been this oversold in a long time. And it's going to be one of the better buying opportunities off of these lows. 200 simple day moving average is at 588.73 cents. Okay, this is how we look for the major bottom now. Now that we've gone through 705 to 587 down, this is where the risk is. All the risk has been removed. So this is where the easy part of the trading. Yes, it will have the wall of resistances on the way up and price ranges, and will still have its volatility as it comes up and hits these different areas of where we can trade back up to. You see? And it's very true. 618 is going to be the upside up here, right below that 620. That's that 10-day simple moving average. But let me just tell everyone right now, daily percent GS is about 14.59 MMT. These trades have got the lower risk. Daily analysis, daily options analysis. And what do? Oh, well, like I just said, once again, let's recap the 590 calls, wholesale price, buying them down here at 650 and selling them out. So you sell them at 10.5, even though they went $3 higher, you make great money. 13,000 of them traded. That contract has the least amount of risk now that all the risk has been tested at the 200-day moving average. Yeah, 880 on the low with the $3 pop. He's closed at 21.95, 17.90 on the high. Last print 12.17. That's on that 585 call, which is in the money. And here's the Apple print 595.32, down 8.6 handles. Intraday range $14.26 round trip. That concludes Apple Computer.